So what's up guys? I'm just trying to make a quick breakdown, explaining some things you guys don't really understand in this space. So in this video, I want to explain a key thing in which it will increase your win rate. It will increase your win rate, which will bring us to the main point of this today's topic. It's all about the key levels. You understand? So, what is key level? What are key levels in general? Key levels are just psychological areas or zones. You understand? A particular turning point, a particular point where market is reacting or rejecting from. It is what we call key levels, and they are classified. You understand? Into like the demand and supply, resistance and support. Those are the key levels we have in the space. We have the OCL, we have the OCL. I'm coming. We have the OCLs like this. This is the OCL. It is basically formed this way, of which you will see a bearish or bullish candle. So the middle of it here is the open and close level we are talking about. This particular point is the OCL. This is a key level. We have we have this. This is a support level. This one is a support level. So market, let's say like this. These are support levels. So market is supposed to turn from there as a support zone, but market now break below it. So that becomes a resistance level. You understand? This is the SBR like this. You feel me? And then the opposite of it like this. Market now break above it, making this place a resistance breaks that will now become our support like this. You understand? So this one, this is RBS, and then this one, this is SBR. So getting to know this, we also have other levels. We also have other levels like the QM, like this. So this is the QM. You see QM level, which we just call it QML. You see market sweep this liquidity here, and then break structure, giving liquidity here, and then this is the QM level. So you'll be expecting market to turn from this point. This is the level that is displays in this particular structure. You understand? This is the key level. We call it the QML. And then we also have like the other blocks, the fair value gaps. You understand? The other blocks, you guys already know the other blocks. Bullish candle, bearish candle, bullish candle engulfs it, and then bullish bullish candle, bearish candle engulfs it, which makes this a bullish order block, and then this a bearish order block. So this is it for this particular, you understand, about the key levels. And then to apply these key levels concept to increase your risk to reward, that's your win rate, you can you can then as well learn the concept of supply and demand, know your support and resistance very well, because those levels, they act as a turning points, the turning points you have in the market. So after getting those turning points, that's where your strategy now comes in. You need to find if your strategy formed inside after tapping or rejecting from those your key levels, your supply and demand, your resistance or support, your OCL. Then you will now wait for your strategy to be formed, wait for your structure to be clearly seen, then you take your trades. You understand the point. And then again, you also have the trend lines. You understand? You also have the trend lines. We also have the trend lines. Maybe market will be going down like this. Market will be going down like this. So it identifies that this market is bearish. This market is bearish like this. So if market will now come back to this zone, what are you expecting? Market coming back to this zone like this, you're expecting market to display your strategy. Then you can now enter for the sell continuation. What is your strategy? You are the one that know your strategy. So you have to look out for what you used to be looking out for before taking your trades, um using your strategy. When you see it clearly here, that gives you more confidence to take the sell to cover this low. You understand? So not that key levels are not facts. The only thing that is considered fact in this concept is structure. The only thing that is considered as fact in this concept is structure, because structure is the major information. Structure is the foundation of it all. The key levels are just confluence used to confirm a move developed or formed in the market structure. So for you to think of using a key level in the market, first ask yourself, is this market structure that is this level, is it market structure that gives me out this key level, or is this key level really in line with the structure of the market? So understanding market structure will lead you to know the bias of the market, understand, in confluence with your key level. So know the fact first. Just get to know the fact first. Study and learn how structure is. Know structure first before adding key levels. Key levels are confluence you need to be using for your trade. Know the structure. Know the structure of the market first. So understanding the logical part of your strategy is the key. That's just the key. Understanding the logical part of your strategy. Then you study the structure of the market. Then know your key levels. After you walk through this process, you understand your strategy very well, you get the structure of the market clean, understand how key levels works, then you can now bring everything in and comply and compound them in one place to execute more trades with no fear. You understand? So just get to know how your strategy works. By understanding the structure of the market, know your levels, and then know when to enter the market, know when to exit the market. When the market is at your key level, find your strategy to be displaced, wait for confirmation by following what you used to wait for before your strategy is being played out, so you can take the trade. After confirming that, then you can now go in